Three banks, the same day, the same stock, $205, $300, $800. SpaceX just posted its first ever earnings. Revenue up 92%, the stock popped 9%, and then handed most of it back after hours, the moment Wall Street saw how much cash it's burning. So I rebuilt Wall Street's models myself. Goldman's own numbers, Morgan Stanley's own forecasts, 10,000 simulated futures. We even stress tested the crash. What happens to this stock if it unwinds the way the dot-com bubble did? Just models, not predictions. Because one blockbuster quarter still didn't settle the only question that matters: what this company is actually worth. Here's the paradox. $122 today, even after that earnings pop faded. The street's average target is over $230, but it trades at 70 times its sales, when the median tech stock gets 3. The most exciting company alive, priced like nothing else on the board. One great quarter doesn't change that. The market isn't pricing the business, it's pricing the story, so we ran the machines. 35 analysts, one company, their targets run from $62 all the way to $800, a 13 times disagreement on the exact same stock. The disagreement is the episode. Here is the board dot by dot, and the reminder that stays on screen the whole way down. These are AI models.
Where Wall Street starts, a discounted cash flow model. Forget the jargon, it is one idea. A company is a machine that prints cash, so what would you pay today to own every dollar it prints? But SpaceX barely prints cash yet, so the banks feed the machine a forecast. Goldman's own number, $474 billion of revenue by 2030. Feed that in and the machine votes. $108.33. Now look at the screen. Goldman's own base case run through the standard machine lands right there, and for weeks that is almost exactly where the stock traded. Sit with that. The market had already priced Goldman's dream in full to the dollar. And then this week's earnings pop pushed the price even higher above Goldman's own number. Everything above that line is pure belief. Hold that because it decides the whole episode. Now the same machine, the same settings, but Morgan Stanley's revenue instead of Goldman's. $319 billion by 2030. Out comes $72.53. And yet Morgan Stanley's published target is 300. Same model, same method, and the honest math says 73. The other $227 is the story they layer on top. So price it like its richest neighbor. Palantir, the most expensive big-cap software stock on the market, trades near 36 times its sales. Put SpaceX on that same rich multiple and it is worth about $63. Here is the catch. SpaceX does not trade at 36 times sales. It trades at 70. Twice the richest multiple on the market for a company that still loses money. So we pulled the real ones, 4 named institutions dated on the record. Raymond James, the street high $800, 27 times cash flow on a $30 trillion market. Morgan Stanley 300 with a bull case of 600 and a bear of 75 and 8 times range from one desk. Goldman 205, but it needs the company to raise $270 billion in new debt first. And Morningstar 62 calling everything above it option premium. Same day, same public numbers. Now the great investors. Start with the strictest man who ever priced a stock, Benjamin Graham, Warren Buffett's own teacher. Run his 1949 formula on SpaceX and it returns one number. 0, not a low price, no price at all. Graham's rule is simple: no profit, no value, and last year SpaceX lost $4.9 billion. That is not a glitch, it is a lesson. The oldest rule in value investing refuses to play this game. So stop asking what it is worth and ask the sharper question: what does $122 already assume? Run the machine backwards. To justify today's price, SpaceX now has to reach about $530 billion of revenue by 2030. That is more than Goldman's own number. For weeks the price simply was Goldman's model. After this quarter, it sits above even that. The only argument left is whether $500 billion in 5 years is visionary or a fantasy. So we asked 10,000 machines. Instead of predicting one future, the machine rolls the dice on 10,000 of them. Some where Starship changes the world, some where the orbital AI dream never happens. Every roll prices the stock. Stack 10,000 answers and you don't get a guess anymore, you get the shape of the future. And these are the dice. The dream: does orbital AI ever happen at all? In 3 futures out of 10, it never does, and SpaceX is just rockets and Starlink. 2030 revenue, how big it gets, $150 billion to $700. Profitability, how much becomes cash, 10 to 30 cents on the dollar. Belief, the multiple the market pays, priced like Palantir or like a telecom. And interest rates, what a future dollar is worth today, plus the $270 billion in new debt the plan needs. One die in every simulation asks whether the dream happens at all. Here is the honest number the simulation gives back. The middle of all 10,000 futures is about $57, and only 11% of them land above today's price. Read that slowly. The most exciting stock on Earth, and in the machine's eyes, nearly 9 futures out of 10 end up below where it trades right now. The fixed seed means anyone can rerun this and get the exact same 10,000 rolls. So what actually moves it? 4 levers, each tied to something you can watch. Whether orbital AI executes or never happens swings the fair value from $20 to $137, the widest lever on the board. The exit multiple Palantir or Telecom 65 to 130. Goldman's revenue versus Morgan Stanley's 73 to 108. And interest rates 93 to 117. The first public earnings ever land on August 4th. Watch those. Quick, honest ask, this show is brand new and every one of these models takes days to build. If you want to see the next stock on this table, the subscribe button is how you vote. It genuinely decides whether this series continues. That's the only ask. Back to the math. And now the beat the hook promised. This is not a prediction, it's a stress test. We borrowed the worst crashes in market history and asked one question: if it happened again, where would the math land? Every board from here carries one label: scenario. Take SpaceX's own high, $225, and apply the dot-com drawdowns. Microsoft's path, down 63%, lands near $83, and even Microsoft took 16 years to reclaim its high. The Nasdaq's own path, 50, Intel 41, and Cisco, the company that sold the infrastructure of the future and never saw its high again, 32. Against them, the most bearish published model, Morningstar, 62. Here is the line: even after this week's earnings pop, SpaceX is already down 46% from that high, and the 2,000 paths say it could have again before it touches Cisco math. Scenario, not a target.
Is the whole board, every vote stacked, and here is the two price close this series lives on. Today's price, even after this week's earnings pop, $121.81. The model's perfect price, the composite of the serious ones, $72.53. That is a 40% gap. The chip on the board reads, in the model's words, not mine. The models say, overvalued. And here is the honest part. One blockbuster quarter, revenue up 92%, did not move the bank's 2030 math this whole valuation rests on. If anything, the price now implies a 2030 revenue above even Goldman's bull case. 27 of 35 analysts on Wall Street still say buy. The models and the street flatly disagree, and that is the lesson. Last week, these same machines defended Nvidia. Tonight, they turn on the most exciting stock alive. None of this is financial advice. These are deep models built on public numbers, and every model on this board has been wrong before. That is exactly why we run all of them. So you tell me, who got it right? Goldman's machine at 108 or the simulation that says 57? Put your number in the comments and tell me which stock goes on the table next. The models have spoken. The verdict is yours. For the record, every model tonight is an AI simulation of a published public method, run on public numbers, with a fixed seed so anyone can reproduce it. Nothing here is investment advice, and nothing here is a target. The board prices businesses, never your portfolio. Next stock, next verdict.